Welcome to this video. In this video, we're going to take a look at USDCAD and how the market have moved the last couple of days, and show you guys how the market and the banks move the price, and how they search for liquidity, and how they hunt your guys' positions, and how to be aware of how the market moves. So I want to show you guys a really good example from the last couple of days. So we will start from, let's say, 7th of April to the day today. The market opens in like 12 hours, I guess, because it's weekend now. So we can start to look a bit back that the market have clearly traded really low. You see a really good structure, traded lower, created even many lower lows. And then we saw a break of structure, change of character, these things, and the market started to traded higher. But something that caught my eyes really fast is that it used a couple of days and traded higher with a really strange structure. It made like all these really smooth higher highs and build up liquidity. The market traded higher, reacted from this mitigation, this order block, and then moved higher. And the same, you see again, traded higher from the order block and the mitigation position, and traded like this. But we saw a reversal at this area. What really caught my attention is that the market just went straight through. It didn't have any reactions from this zone, and hunted all the positions that have built up there. And the positions equals liquidity, and liquidity is what the market need to like move, because without liquidity a market is not able to make the next big moves, because they have to have like supplement for the big moves the banks want to do and these things. So you see the market rips down, grabs all the liquidity that have been building up the last couple of days, and then reacts from a order block position and a supply in this area with a really significant candle with a long wick. And then we see the market trades straight up back into this position, builds up liquidity again. My liquidity is marked up with the X on the, but for you guys you can just whatever makes sense for you. So what caught my eyes really is that the market again traded higher, and for the market to do a short again, they want a cheaper, more liquidity and a cheaper price to short the market. So it makes sense that the market trades up, builds this liquidity, and then if we remove this one, you guys see this wick. This wick takes out all the liquidity that's resting in this area, and then just straight out rips down. Rips, and trades all the way down to this order block position over here. If you see the mitigation, and it mitigates, and then you see it just like the market go crazy from here. And that in my eyes it makes sense, because if you guys see, before it like mitigated and then just went straight up, it started to like on smaller time frames start to building this liquidity pool. Again, you see market trades like a retail, builds up liquidity both on the downside and the upside. Market melts, grabs all the liquidity, and then just went crazy from then, because then they have liquidity from this movement to support the bullish structure, and the liquidity from this area. But trades up, you see again, you find double tops, a significant small pull down, and then again keeps on, significant small pullbacks, and then just go straight through the skies. In my eyes, when the banks want to make moves, they do like a game of search and destroy, where they just find liquidity, destroys the liquidity, destroys the retail traders, and then they just fund their own and fund their own trades and just go crazy from there. Grabs the liquidity, close positions, and then go straight through the skies. So this is really good to go and backtest how the market acts on liquidity and order blocks, because what you see here overall is that the market destroys liquidity, reacts from an order block, again builds liquidity, then goes significant, build liquidity, react from order block, and then again. And now I want to see for this week, I want to see USDCAD again build up liquidity, trade lower, and then maybe get a reaction from this imbalance that was created, because you see there is a big gap in the market right here, and it makes sense because you got previously support and demand in this area, and you got kind of structure. So the market have to, in my eyes, for next week build up liquidity, as I said, and just fund their next movements.